Are you ready to crash out your crypto bags by the end of 2025?
Are you ready?
Maybe you're betting on a 2026 blow off. Crypto crowd split. Some people are poised to sell before the year's end, banking on the classic 4-year cycle, which so far remains undefeated. While a growing wave of people insist that the 4-year cycle is done, dusted, toast, over, finito, eyeing a massive peak in the first half of 2026 instead, which is not too far off from the 4-year cycle. Are you feeling a bit dizzy yet? We have other crazy theories too. So grab a drink, kick back, and let's dive into the signals that will give us a clue on when to press the effing sell button. If you've been in crypto long enough, then the 4-year cycle you've heard about a lot, and has so far been the most reliable way to approximate the top of the bull cycle. The game plan is to wait about 500 to 540 days after the Bitcoin halving before even thinking of selling. But when that time comes, you got to think of selling fast because the top comes real fast and real brutally. Even some market pros concur with this timeline. John Glover, Chief Investment Officer over at crypto financial services firm Lendon, and a market analyst specializing in Elliott Wave Theory suggest, recently told CoinDesk that Bitcoin is on track to rally to $135,000 to $140,000 before the end of 2025. In his Elliott Wave chart, Bitcoin is wrapping up wave 3 of a larger wave 5 structure, which he says should carry prices up to these price highs by year's end. But there's a catch. He's also warning that 2026 will likely usher in a new bear market. So 140K is going to be the top. That final push will be it. And then it's over for years on end. There are also several numbers floating around for 2025. Analysts from VanEck, Fundstrat, Standard Chartered forecast a 2025 BTC top between $180,000 to $250,000, which if we're going to rally 100%, Bitcoin better get shit together and start rallying. That said, more and more analysts are thinking that this cycle could be different. Dangerous words, I know, that the 4-year cycle is obsolete. And in a way, it's not different. It's the same as other asset classes. We're entering the maturation phase. So the 4-year cycle in that situation is no longer relevant. Wall Street heavyweight Bernstein forecasts a prolonged bull market, expecting Bitcoin to reach $200,000 sometime in early 2026. They dub it long and exhausting, but argue it's propelled by genuine institutional adoption, the literal shit we've been waiting for years to happen in crypto. Bernstein points to massive flows into BTC ETFs as proof this isn't just a flash in the pan in the market. This is a new amount of structural buying starting to happen. Now we have the 401k news as well, which is also very bullish. Raoul Pal, CEO over at Real Vision, sees the crypto cycle as spookily similar to the 2017 run, but a bit stretched out. He argues the business cycle score is still below 50, and a weakening US dollar is therefore pushing the high into Q2 2026. Not bad. He's hypothesizing a shift toward a slower, more sustained rally for the cryptocurrency markets. It's only 9 months away, but a lot can happen in 9 months. Think of it this way. Traditional market cycles usually follow fairly predictable rhythms linked to the economic phases of growth and slowdown, particularly in the U.S. economy, which is the global engine of everything, right? But when the economic engine is running at a slower pace, as shown by a low business cycle score currently, the corresponding market phase, including the cryptocurrency bull run, because we're increasingly linked to what Wall Street is doing, tends to stretch out over a longer period. This idea is kind of central to the thesis here, which goes beyond just reading charts and instead anchors sort of more in a fundamental health of the broader economy. Another analyst, Decode Jar, also supports the idea of an extended cycle theory, pointing to a potential peak in 2026. Now, he's the creator of the Decode Macro Trend Oscillator, a customized tool that he developed himself. Now, this indicator actually aggregates 40 different macroeconomic data points. So it's very, very comprehensive, such as interest rates, global liquidity, consumer sentiment, all that kind of stuff into 19 weighted signals, offering a pretty interesting and unique way to view market trends. And I really think that the broader macro scene is very indicative of what crypto will end up doing. Now, these charts see bullish signals emerging as bearish red bars start to fade. We are moving towards the expansion phase, but just the start of it. We have a long way to go, suggesting the bull market could stretch at least a year from its trigger, influenced by regulatory shifts and macro conditions. Notably, there hasn't been a green bar on Decode's indicator this cycle. Not a single one. Think about it. It's crazy. So he's optimistically noting here that the first green signal is nearly upon us, with those red bars steadily losing ground. The economic scene is shifting, the macro scene is shifting, and it's a good thing. Okay, this shift towards green is imminent. I know what you're thinking. Oh, but markets have been kind of bullish already, Lark. You ain't seen shit yet. A shift here could kick off the final leg of this bull run, stretching us again into 2026 at some point for a final top. Now, before we get into the rest of this story, guys, who's going to give you up to $1,299 cash back just for depositing crypto? That's Femex, OG cryptocurrency exchange, a hot spot to be trading. Look, deposit $1,000, get $200 back. Deposit $10,000, get $999 back. $15,000, $1,299 cash back money in your account. Nice. If that wasn't wild enough, they're going to also exclusively, when you're using this link right down here, upgrade you to VIP level 2. That means 50% off your spot trading fees, 40% off your futures trading fees. Crazy deal, okay? This is not some tiny bonus. This is a serious opportunity for active traders. If you're trading a lot, you know how much those trading fee discounts add up. Plus, the free money's awesome, all right? Femex is a proven exchange. They work anywhere in the world. Okay, it means it's available to you. You might need a VPN in some cases, okay? But this promo will not last forever. Hit the link down below. Claim your cash while it's still available. Go check it out. Now let's turn to the macroeconomic clues driving this potential shift. Most analysts who believe that the 4-year cycle is dead argue it's because we have had a structural shift in the buyers of crypto. Wall Street and financial institutions are now the big driving force behind Bitcoin and crypto for the first time. Because that is the case, we therefore must consider the cycle TradFi follows, and they're not looking at the 4-year halving cycle, right? This was the old way of doing things. The business cycle, which averages around 5.5 years and unfolds in 4 phases, expansion, peak, contraction, and trough, is what Wall Street tends to follow, and that tends to follow along with the average length of a stock market, bull market, by the way. Now, these phases reflect the economy's growth, its maximum output, a slowdown, the lowest point before recovery. Now, according to a Fidelity report, the U.S. and major economies are currently in the late expansion phase, where growth kind of moderates but remains solid with rising inflationary pressures and tighter monetary policy. This phase typically is marked by steady employment, which we have, consumer confidence, which a bit shaky, but okay, we generally have it, and suggests we're not yet at the peak. The Carson Group's mid-year outlook for 2025, released back in July, reinforces this idea, noting that the current bull market is just a baby at 32 months old, or maybe we could say a teenager, and it's less than half of the 67-month average, as bull markets tend to carry their momentum forward. Okay, so in this idea, we should still have 2 years of bull run left to go. The Carson Group also projects this one might last longer than expected due to AI and all the other stuff going on, potentially extending well past 2026 through 2027. 2028 will be the average. Okay, these guys see it lasting potentially even longer. So a crypto rally will be, of course, a lot of volatility on the way, could go longer than people expect. The U.S. leading economic index, or the LAY, a TradFi favorite, tracks 10 key signals like manufacturing orders, consumer expectations, etc., to predict economic turns about 7 months ahead. It has nailed past downturns, flagging the 2008 financial crisis as well as 2020's COVID-19 recession. As of mid-2025, the LAY dipped 0.3% in June with a 2.8% yearly decline, signaling a slowing amount of growth rather than a collapse. Now, this aligns with Fidelity and Carson's late expansion view, suggesting the economy and cryptocurrency markets could maintain their momentum for a lot longer than people expect, right through 2025 and into 2026. A Q4 2025 peak, with all this information in mind, looks relatively unlikely, supporting the extended bull market thesis. The LAY's cautious optimism here hints at a steady climb, not a sudden top, reinforcing the case for holding off on that year-end cash-out strategy. It's not to say you can't take profits. Take profits when you have money on the table, right? So which of these ideas is going to take the cake? Is the market flashing, selling Q4, or whispering, hold your horses, the ride isn't over? Truth is, no one knows for sure. The cycle has been full of surprises and first things that have happened, like hitting a new high for Bitcoin before the halving. It's been an exceptional cycle. This is the Wall Street cycle. This is the maturation cycle. This is the cycle where crypto goes mainstream. for real this time. For the first time, a sitting U.S. president not only holds crypto, but has his own meme coin and is shilling crypto nonstop and changing all the regulatory scene in America to adopt crypto and wants it to be the crypto capital of the world. Add in the fact that asset managers' multi-trillion-dollar war chests are buying like there's no tomorrow. Banks can now be fined for debanking crypto holders. That's a lot of firsts, and a lot of big things are happening. And maybe for the first time, the famous 4-year cycle could fail, because a 4-year cycle worked when we were just a small bunch of tech nerds hanging out gambling on magic internet money. But here's what we do know. There's no universal rule for taking profits, and you're not going to perfectly time the top. Nobody said it has to be all at once. Instead of waiting for a giant neon sign in the sky selling, flashing, sell, 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 might make more sense to set up multiple targets. Sell along the way. Sell on the way up. Make sure you're making money no matter what happens. There's always opportunities. Have an abundance mindset, not a scarcity mindset in the market. That's what screws most people up, to think this is the only opportunity they'll ever have to make money. Okay, what worked in past cycles may not work again. Flashy indicators may not work again. Remember, in a market rewriting its own rules, the winners aren't the profits. They're the ones who walk away with profits. Okay? Do you want that to be you? I bet it is. Make sure you pay yourself. Who knows how the hell all this ends up? Who knows how crazy it gets? Do the theories come true that we follow the stock market for another 2.5 years for the mega golden bull run in crypto? This is our time. Time will tell. I don't have a crystal ball. You don't either. But the one thing you do have is the ability to click the sell button when you have shit tons of profits sitting in front of you. Don't screw it up. Thanks for watching.